Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 10 out of 10 stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that score a perfect 10. That is on the Tip Ranks Smart Score, which looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of that, these stocks also come in with a strong buy consensus from Wall Street analysts and price targets that would imply some double-digit upside potential. We found today's stocks under TipRank's top Smart Score stocks page. That can be found right under the Ideas tab, and here you'll find a collection of stocks currently scoring that 10 out of 10. I narrowed in on the consumer defensive and consumer cyclical sectors today and added the columns here for analyst consensus to find some that also have that strong buy rating. You can check out these top Smart Score stocks for yourself on the TipRanks website or right on the mobile app, which you can download using the links in the description below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into our 3 perfect 10 stocks. First up, we're taking a look at Universal Technical Institute. They trade under the ticker UTI, currently priced just shy of $30 per share. The stock has gained 47% in this past year, and in the last 3 months is up over 11%. They currently score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity and insider transactions. Founded back in 1965, UTI is a leading provider of technical education. Under their brands of UTI, Motorcycle Mechanics Institute, Marine Mechanics Institute, and NASCAR Technical Institute, students train in automotive technology, diesel mechanics, collision repair, welding, CNC machining, and more, using industry-standard tools and manufacturer-sponsored curriculum from partners like Ford, BMW, and Mercury Marine. They have 15 campuses across 9 states, offering accelerated programs typically 12 to 18 months long. They'll be sharing their 4th quarter earnings report soon, next week on November 19th. This does follow a Q3 earnings beat back in August, where they also raised their future revenue guidance. Earnings per share of 19 cents came in 8 cents ahead of analyst expectations, while revenue grew 15% year over year to $204.3 million. Their adjusted EBITDA grew 37% year over year, and their average full-time active students grew nearly 13%. One analyst with a buy rating on the stock is a 5-star analyst from Barrington. He said the company's strategic initiatives under its North Star strategy are expected to drive significant growth, with a projected revenue compound annual growth rate of approximately 10% through the expansion of existing programs and the opening of new campuses. The UTI stock has 5 current analyst ratings and does come in as a unanimous strong buy. The average price target of $36.50 implies an upside potential of about 23%. Looking at those ratings down below, they're fairly closely grouped together here, ranging from an upside of 21% to 28%. Second on our list today is Performance Food Group. They trade under the ticker PFGC, currently priced at $96 per share. In the past year, their stock has gained 13%, but is fairly flat in the last 3 months, down slightly at 0.8%. Their 10 out of 10 score includes very positive crowd wisdom and hedge funds increasing their holdings by 1.1 million shares last quarter. Performance Food Group started out in 1885 as a food peddling service in Virginia and has since evolved into one of the largest food service distributors in North America. They operate through 3 key divisions: their food service for restaurants and institutions, ViStar for vending, concessions, and office coffee, and convenience for convenience stores and retailers. They market and deliver over 300,000 national and proprietary products, including fresh, frozen, and non-food items, to more than 300,000 clients. They just shared their Q1 earnings report on November 5th. They did have an earnings miss, but beat on revenue and increased their fiscal 2026 sales guidance. Earnings per share of $1.18 fell 3 cents short of analyst expectations, while revenue climbed nearly 11% year over year to $17.1 billion. Their food service segment achieved a 15.6% increase in total cases, and they began shipping to hundreds of additional Love's Travel centers. Just yesterday, we heard from a 4.5-star analyst from Piper Sandler who increased their price target on the stock. They said that overall it was a very solid quarter for the company on multiple fronts, with the food service segment exhibiting continued and frankly quite impressive momentum with organic independent case growth, and with good news in the convenience segment, which will be onboarding 2 sizable new customers throughout the fiscal year. Performance Food Group has 11 current analyst ratings, coming in as a strong buy with 9 buys and 2 holds. The average price target is $119, implying an upside potential of 23.5%. Looking at those recent ratings, we have had several analysts increase those price targets following the earnings report. Those upsides range from 5.75% all the way up to nearly 36%. If you've made it all the way to our third stock today, then make sure you've hit that thumbs up button. Last but not least, we're looking at Amer Sports. They trade under the ticker AS, currently priced just above $30 per share. The stock has gained 50% in the past year, but in the last 3 months is down 19%. And both hedge funds and investors seem to be buying the dip. With that 10 out of 10 score, we've seen a big increase in hedge fund activity, with them increasing their shares by 2.6 million, and very positive crowd wisdom as well. Amer Sports is a multinational sporting powerhouse based out of Finland. Founded back in 1950 amid post-war reconstruction, they've transformed from a tobacco and shipping conglomerate into a global leader in performance-driven sports equipment, apparel, footwear, and more. They are the company behind iconic brands such as Arc'teryx, Salomon, Wilson, Atomic, Peak Performance, and Armada. Their next quarterly report is coming up soon on November 18th. This does follow a Q2 earnings and revenue beat back in August. Earnings per share of 6 cents beat expectations by 3 cents per share, and revenue climbed 24% year over year to $1.24 billion. For their Q3, analysts are anticipating earnings per share of 25 cents compared to last year's 14. Just over a week ago, an analyst at Citi opened a 30-day positive catalyst watch on the stock, saying that they see an attractive risk versus reward into the earnings print and believes that Amer is seeing accelerating brand momentum. Amer Sports has 12 current analyst ratings and comes in as a strong buy with 11 buys and 1 hold. And the average price target of $46 implies an upside potential of 52%. Looking at those price targets down below, once again, quite a few analysts bumping up their price targets, and upsides range from 32% all the way to 75%. So that is a quick look at 3 stocks, all in the consumer sector, with a 10 out of 10 score and a strong buy consensus from Wall Street analysts. Let me know your thoughts on these companies and if they were on your radar before or not. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.